right now, as we look at the live tape, Strive Inc., trading under the ticker ASST, is sitting at exactly $0.95. That represents a significant downward move, stripping away 0.07 cents from the share price, resulting in a decline of 6.82% so far in today's session. This isn't just a minor fluctuation or standard market noise. When you see a stock trading under $1 take a hit of nearly 7% in a single day, it signals a specific kind of distress that we need to analyze carefully. The market is open, the data is live, and the tape is telling us a story that goes far beyond a simple red candle on a chart. Most people looking at a stock like Strive Inc. right now have a very specific expectation. The common belief is that when a company dips below the $1 mark, it automatically becomes a value play, a bargain bin opportunity where you can load up on thousands of shares for the price of a nice dinner. The expectation is that the sell-off is an overreaction and that a bounce back to previous highs is inevitable simply because the price looks cheap. But here is the reality we need to confront immediately. A price of $0.95 is not a discount. It is a precarious position that introduces massive structural risks, including compliance issues with exchange listing requirements. The reality is that the market is repricing the risk associated with this company, and today's drop of 6.82% suggests that institutional confidence is eroding faster than retail optimism can prop it up. We are seeing a clash between the hope of a turnaround and the cold mathematics of capital preservation. When we look at the intraday action, the selling pressure has been relentless since the opening bell. Usually, with small-cap stocks, you might see a morning dip followed by a consolidation period where day traders step in to scalp a few cents. Today, however, Strive Inc. has failed to find a solid floor. Every time the stock attempts to reclaim a higher level, it gets met with a fresh wave of sell orders. This indicates that liquidity is being pulled from the bid side. It's not just that people are selling, it's that fewer people are willing to buy at these levels. If you are sitting there with your Fidelity mobile app open, or perhaps glancing at your Robinhood stock trading dashboard, you might be tempted to catch this falling knife. But you have to understand the volume profile. The volume today is backing up the price drop, which means this isn't a low volume drift, it is a high volume exit. This brings us to a critical comparison. When you look at blue-chip giants, say Apple stock or Tesla stock, a drop of 6% is usually a headline-grabbing event driven by macroeconomic news or a failed product launch. For a company the size of Strive Inc., a 6% drop is often about liquidity and survival. It's about the runway. The market is effectively asking, does this company have enough cash to execute its vision without diluting shareholders further? The answer, judging by today's price action, is being viewed with skepticism. Unlike Nvidia stock, which moves based on global semiconductor demand and AI trends, ASST is moving based on micro-market structure and speculative sentiment. The distinct lack of support at the 0.98 level earlier today was the first warning sign. Once that level broke, the flush down to 0.95 was almost mechanical, triggered by stop losses from traders who were hoping for a quick scalp. We need to talk about who is actually trading this. On one side, you have the algorithms and high-frequency traders who are agnostic to the company's long-term vision. They see a breakdown in technical support and they short the stock. On the other side, you have retail investors, perhaps using SoFi Invest or Robinhood stock trading, who are holding on, hoping for a press release or a sudden reversal. The tension between these two groups is palpable. The algorithms are winning today. They're pushing the price down to test the resolve of the long-term holders. If you are engaging in online investing, strictly looking at the charts, you can see that the momentum indicators are deeply oversold. But in a strong downtrend, oversold can persist for a long time. It does not mean a buy signal is imminent. It often means the selling is intense and persistent. Let's pause on the price action for a moment and look at the broader context of online investment and how it shapes stocks like ASST. The accessibility of investing sites and individual brokerage accounts has changed the landscape for microcap stocks. 10 years ago, a move like this might have gone unnoticed by the general public. Today, with Schwab Intelligent Portfolios and Fidelity brokerage accounts in everyone's pocket, the reaction time is instant. However, this accessibility is a double-edged sword. It creates volatility. When a stock like Strive Inc. starts to slide, the retail crowd, often coordinated through social sentiment, can panic, exacerbating the drop. Alternatively, they can pile in, creating a short squeeze. Today, we are seeing the panic side of that equation. The sentiment has soured and the exit doors are crowded. Now, I want to challenge a common misconception. Many people believe that investment help or using a SoFi robo-advisor is only for people who want safe, boring index funds. That's not entirely true. Even if you are into self-investing and picking risky stocks like ASST, understanding the principles that Fidelity Wealth Management or Interactive Brokers trading platforms offer is crucial. They emphasize risk management. The number one rule in risk management is to respect the trend. The trend for Strive Inc. today is aggressively down. Fighting that trend without a clear catalyst is a dangerous game. Speaking of catalysts, let's look at what Strive Inc. actually does. While the ticker ASST is often associated with Asset Entities Inc., a company deeply embedded in the digital community and social media marketing space, specifically within the Discord ecosystem, for the purpose of this analysis regarding Strive Inc., we have to look at the business fundamentals that justify a sub-dollar valuation. Companies in this sector are often fighting for relevance in a crowded digital economy. They offer services that help content creators and communities monetize and manage their audiences. It is a modern business model, absolutely, but it is also a model with low barriers to entry. The market is asking whether Strive Inc. has a moat, a competitive advantage that protects it from rivals. When the stock drops to $0.95, the market is essentially saying it doubts the strength of that moat. The business of managing digital communities and providing social media tools is volatile. It relies heavily on user adoption and retention. If Strive Inc. reports even a minor slowdown in user growth, or if a major client leaves, the revenue impact is immediate. Unlike a utility company with predictable cash flows, a tech services company like this lives and dies by its quarterly growth metrics. The drop today could be pricing in a leak of bad news, or it could be a reaction to a lack of news. In the microcap world, silence is often interpreted as a negative. Investors want constant updates. When they don't get them, they move their capital to Interactive Brokers stock trading accounts to find better opportunities. Let's take a step back and think about the psychology of holding a stock like this. You bought in, maybe at $1.10, thinking it was the bottom. Now it's at $0.95. You're down roughly 15% on your position. Do you sell and take the loss, or do you double down? This is the sunk cost fallacy in real time. The expectation was that you bought the dip. The reality is that the dip kept dipping. This is where having a disciplined approach to invest online is vital. You cannot let emotion dictate the trade. If you are using Fidelity ETFs or Fidelity mutual funds for your core portfolio, you sleep well at night. But with ASST, you are watching every tick. I want to hear from you on this. Comment below how many shares of Strive Inc. you currently hold and what your average price is. Are you looking to buy more at 0.95 level, or are you waiting for it to drop further? I'm genuinely curious to see where the sentiment is among the viewers, because often the retail sentiment is a contrarian indicator. Moving back to the analysis, we have to consider the regulatory aspect. I mentioned this earlier, but it deserves more focus. The Nasdaq has strict listing requirements. The key one is the $1 bid price rule. If a company trades below $1 for 30 consecutive business days, they get a deficiency notice. This starts a clock. The company then has 180 days to regain compliance. Why does this matter today? Because trading at $0.95 puts Strive Inc. squarely in the danger zone. If they cannot rally back above $1 soon, the threat of a reverse stock split becomes real. A reverse split is when a company consolidates shares, say 1 for 10, to boost the share price artificially. While this solves the compliance issue, it is almost always viewed negatively by the market and often leads to further selling. This fear of a reverse split is likely a significant factor driving the 6.82% drop today. Smart money is exiting before that possibility becomes a probability. We have to look at the sector rotation. Money is